Hey guys, welcome. Thursday, May 28th, 2026. One more trading day left in the calendar month of May. It was not a sell in May, go away. Hope you guys are doing all right. We'll give you guys a few minutes to shuffle in here and we'll get started. You can put your questions in at any time. And it's after hours and they're still pushing the market up. How you like that? Trying to get to that 6,600 mark on the S&Ps. So if you guys have any questions, put them in at any time. I will share my screen. Any topics you want to cover, put them in. Otherwise, this will be another short session. Let's see here. Okay, come on.
Recording in progress.
Yes, we know recording is in progress. Ah, Jay asks, do you think the market will ever go down again? I guess I'm puzzled by the question. Who cares? Do we want the market to go down again? Yes, it will go down again. No doubt about it. We've been through periods like this before, and they all end, and they will all end in tears ultimately. But Fed fueled liquidity and just money trying to find a home, and a lot of people underinvested, and you've got traders trying to continue to short this market because it's overextended. AI is dead, and the market's going to collapse. The economy is going to hell, and we're all going to die. So, how you like that? We're, it ends when it ends, but I have a target of my next target is 76.80. And I'm seeing some targets of 77.50. And these are measured moves from different patterns. And I'll talk about that in my weekend video. So this past weekend, I just put out a video just on our trades. I almost didn't do anything because I should have let you guys know that I was going to take the weekend off, and I didn't. But so I wanted to put something out. But this weekend, I'll be putting out a market video. But there are still targets above, and there are a lot of people underinvested. So do with that what you will, but eventually, yes, this market will come down, and when it will be is anyone's guess. But ride the wave while it's making money. Hopefully, you're making money. Michael asks about AAOI. Let's take a look at it. I like AAOI. And what do we have here? So make sure I've got my charts straightened out here. Okay. Little, if I get rid of the stupid Zoom doc, then I can't get to the questions anymore. So I like AAOI. It could be coming into support here. And, MACD is definitely on a sell signal on the daily, but it's doing what some of these other optical stocks have done. LITE got hit today. Yeah. What's well, GLW? I don't know if that's really a um, fiber stock, but I mean that one got hit today. So it's basically whack-a-mole market here. And AAOI, yeah, I can see if you have a longer term, you can do a trade in here. We're coming into a chandelier stop here. I mean, you could have your stop um, right down here around 160. Not too bad. What's that? 3%. If it goes below there, 50-day is down here, but AAOI is a wild one for sure. You know, we go up, we go down, we go up, we go down. It's like a bucking bronco, and we hit 233, and next thing you know, we're at 169. So I have a long-term position in it. I like it. The options are crap. But if earnings are out of the way, so if you want to do something in AAOI, and I might for the room, um, I might go out to July. Let's see here. Get my mug out of the way. Go over there. Okay. Jeez. All these little accessories Zoom puts in, they just get in your way, and yeah, they're useful, but if you don't need them, who cares? AAOI. And no, I didn't wake up on the wrong side of the bed today. Let's see here. Do I have everything I need here? Yeah. All right. So look at these options. I mean, all right, you come out here, you have 29.20, 31.50. I just don't like that. And let's try in June if you want a shorter term trade. Is that any better? No, I mean $1.80 spread. Ah, open interest here of 16.80, 16.50. That's more reasonable, but I just don't like going out of the money that much. But it is a 48 delta. Let's see over here. So what I like to do is, all right, if I want to go at the money, let's say 170, and it's 2010 times 1.05. So the maximum I pay is 2110 for this particular one. I won't go 5% more over the bid. Um, and this one is definitely almost 10% over the bid. So you could get away with this, but you're giving up a bunch of edge. So you could buy a call there. And let's see if we can construct uh, and you need a wide one for this because look at implied volatility here in June. Um, Only 134.95%. Now, my guess is this is in the 50th percentile or higher. Yeah, it's 59 percentile. Okay, so what 134% implied volatility means that this thing could go to zero, or it could go up 1.3 times from here between now and expiration. That's how ridiculous the volatility is. And that explains a little bit about the wide spread. So if you're careful, if you wait for them to come to you, just do the mid. But I'm not endorsing this trade because it's just the spreads are wide. When it comes to stuff like this, I'm either buy the common or do nothing. And all right, so let's see if we can sell a put on here. So the 135 put, we have an expected move of about $45. Take away 45 from 169, that's about 125. So if you want to be one standard deviation out of the money, you've got to go to the 125 calls, and that's $1 wide. Okay. So if you can name your price and just be patient for it, you could sell a put here, or you could do your call spread 170, 200 for $10. Put your price out there and let them come after you and do the same on the way out. So um, these are not terrible spreads, but they're not good spreads either. And you got to be careful with them. And the safest way to go with a stock like this is to just buy the common. And when you sell a put in something like this, especially when that's been down like $10 today, so today would have been a good day. Um, you're giving yourself a margin of error. You've got $45 before it pulls back. So hopefully that helps. And if you have particular questions, come back at me. Is Google squeezing? that's from Dan. Let's see what Google is doing other than just really kind of getting on my nerves because I've got a position in here and the market goes, and this thing just languishes. So let's see what it is doing. 390. All right. So, it rallied into the 408 and now it's coming in for a landing. It looks like it wants to start to get going. Yeah. I mean, this is, the market is definitely not looking to sell off. I mean, there are no sellers in this market. I mean, there are, but the bears are getting run over by the bulls, no doubt about it. And yeah, I mean, this could be uh, coming in for a squeeze. I do like Google. It's just so irritating because the stock just um, it it just goes sideways for so long. Then here we gap up and you know we go up and now we're back down again. It's just I don't know. It's a frustrating stock sometimes. But what can we do in Google? Yeah, I like Google here. I like the fact that it's cooled off from the 408 level, came all the way down to 381. So it would have been nice to pick it up about $5 to $10 earlier. But let's see what we can do with Google. I like it. All right, if we want a short-term trade, June gives us 21 days. Let's see here. 3,100 open interest, 1380, 1445, and on the 305s. I'm not really keen on these $2.50 strikes. And you can see they opened them up recently. They have a lot less open interest. Here's a good one, 390. All right. And I usually like to collect when I'm doing a spread, if I want to do a spread, then I want to collect about one third, reduce my cost by about one third. So let's say these were $12. I want to collect $4 on these when I sell them. Um, and it's a 26 delta. So if I want to be take a little bit more risk and spend a little bit more money, then I go to the 415. So that's a $25 wide spread for $8.13. You got a 3-to-1 um, risk reward on this. I kind of like this. 390, 415. And if you want to be more aggressive, and honestly, um, you want to buy this call spread and sell a put spread, I could see that. We've got a $24 expected move into June 18th. All right, 390 minus 24, that is 766 or 366. So you could sell this 365 call naked and you're one standard deviation out of the money. You could even do, no, I guess I wouldn't. Did I misread that? So Google was, yeah, up $1.30 today. Yeah, the NASDAQ was up hundreds of points and 276 points, and Google was up $1.30. Love it. Here we go. 365. Yeah, I mean, you could do that for 546. You want to cap your loss? Uh, Buy a 340 put. So 390, 415 call spread, finance with this 365, 340 put spread, reduces your cost. What are we getting for this? Uh, about $2, reduces our cost by about 25%. Not bad. Or you can just do the call spread. Or if you want to just be straightforward, you buy the call. And if you want to have a stock substitute, you buy something deep in the money with an 85 more delta. That way you basically sidestep a lot of the decay and you get an 85 delta thing. You could do a deep in the money. We've shown you how to do this. If you come over here and you want to kind of do your poor man's covered call or poor man's spread, um, you buy the 360s and come out here. So if you look over here and you see there's $2.93, about $3 of extrinsic or time value in these options. And if you choose something like the 410s to reduce your costs and make it like a deep in the money spread, this would be theta negative because your short call has more extrinsic value than your long call, and therefore you're definitely not paying any time value for this spread. So just another idea, and it's a way for you to sidestep any time decay if Google goes nowhere or goes sideways to down for a while, and then you can roll this out. But obviously, there's a lot more risk in this than the other play, and of course. If you're really aggressive and you have a pretty good account, and you want to just get long, you can get synthetically long and probably going a lot deeper into this than you wanted to. You buy the 395 call, say sell the 385, it's a buck 10. It's basically a synthetic long stock position. Sell a put to buy a call. There you go. All right. Thanks for the questions, guys. Let's take a look at what's happening in the markets and keep your questions coming and we'll answer them for you. Here we go. SPX. For those of you new to Option Market Mentor, welcome. Questions are always welcome, and your suggestions and feedback on these live training sessions and videos. I did mention to Dan that I'm going to be switching this over to 1:30 p.m. Eastern Time starting, I think, on the 26th, the Thursday, whatever it is, of June. So in a few weeks, we're going to switch over to doing these during the live training day. So like it or not like it, you can let us know, but that's the direction we're going in for the summer. All right. So here we are, another all-time high. Notice here is this is the daily chart right here, weekly chart, monthly chart. And so we're looking at the daily solid candle today. We could not even take out the prior day's low. Actually, we did by a point and just recovered yesterday. And then a new all-time high here today. Options applied expected move was at, call it 75.10. We're at a healthy level above that. Let's see here. What happened to my charts? Sorry about that. Come back. There you go. All right. So options implied move 75.09. We're at 75.68. So almost 1% above the implied move. And what happens when we get above the implied move, you tend to get a bit of tailwind on this because all the people who were hedged here are now having to chase, and market makers who were counting on that implied move have to buy futures to hedge the calls that they sold. So we'll see if tomorrow brings us back inside of range or not. But my guess is the way this candle looks is we're not coming back inside this expected move. And this week's expected move was about 115 points. So we are 60 points above that. So we're basically 50% higher than the expected move. And that all came essentially today. I mean, that's 60 points from the lows this morning. In any case, MACD is sideways to down. It is on a sell signal on the daily, but it looks like this fast line, the blue line, is looking to cross back up over here. And we're still overbought on the RSI. So we're at the 72 level. All right, so let's take a look at the weekly. All right, weekly. They tried to sell it down. Basically got caught right in the 8 EMA here. And we seem to be riding it up in some form or fashion. Whether you're using the 8 or 9 or 10, it doesn't matter. But those short-term moving averages tend to provide some support. And we never even got close to the 21 EMA. That's my green line here. The yellow is 8. 50 is down here in blue, and my 200 is all the way down here in red. The purple one is the 100 DMA. Enough references for you out there. MACD, make sure, is still on a sell signal and has been for weeks now. But even though we're making new all-time highs, we are on a sell signal on the weekly. And let me see why this is stretched out. Hello. Okay, that's better. Here we are. All right. So, I mean, look at these two fine soldiers in a row. And nothing to complain about here. MACD is definitely positive. And we are red hot overbought on the RSI. So, nothing to complain about here. We are in rally mode, bullish, bullish, bullish. PSAR, chandelier stops, all bullish. You're either long or neutral. Can't be short in this market. You will lose your money. NDX, NASDAQ, another new all-time high. Who'd have thunk we would rally all the way from 22,000 to 30,000, 8,000 NASDAQ points since March 30th. Amazing. And we have an expected move on the NASDAQ of about 634 points. And we are above the expected move. Here we are, right up there, 30,115. We're about 148 points above there. So MACD, similar to the SPX, trying to flip positive into a buy signal on the daily. RSI is definitely overbought, so nothing unusual there. It's still doing the same thing above all moving averages, and we just rally away. NASDAQ is just was the strongest today, up 84 basis points. How much was the S&P's up? 64 basis points. And did the yeah, the small caps are only up 43 basis points. The Dow barely up on the day. So when you get the a strong tech rally, the Dow Jones tends to sit out, and it's more in the way of blue chip stalwart value stocks, not the growthy stuff. But the opposite happens when tech is taking a break. Weekly chart, again, right through the 80 EMA, close to support on a 21 EMA. MACD still on a sell signal here. And this concerns me a little bit, but the proof is in, the daily. If it flips back over, eventually that will propagate to the weekly. RSI is at the 60 level, not overbought, not neutral. So nothing telling us nothing here, but two fine soldiers in a row on the monthly and nothing to complain about. I mean, imagine we go up higher tomorrow into the end of the month. I mean, anyone looking at this uh, and who has missed it says, "Ruh-roh, there could be some chasing into June." So selling may and go away. Not if you want to make money, that's for sure. MACD is positive, and so is the RSI. Bullish, bullish, bullish. You're long or neutral. Um, Shorting is not an option in this market. You will lose your dough. Russell 2000, these small caps had an expected move of about 68 points. Now, I'd love to see this exceed accepted the expected move. I amuse myself here because I've got no one to talk to, yeah, and therefore I have to amuse myself. Anyway, we've got right at the expected move here, 29, 37.6. Okay, we're right under that for the week, the 68-point move. MACD is already flipped positive. That's a good sign on the daily. And the relative strength index is trying to rally back into the overbought area. So um, playing a little bit of catch up in the small caps at this point. So looks much better than it was. We just need it to sustain. What just has been happening of late is that the small caps have just they're leading the way when there's weakness, and they're not really leading the way when there's strength. So that's kind of an anomaly. All right, so I do have a weekly chart. So why does it look like we're at the implied move here, but far away here? Something's, I must have to scroll. There we go. Okay. Um, I wish I could get used to the trading view charts. I'm just not that into them yet. And I'll admit that I haven't spent enough time. I've spent enough money on them, but I haven't spent enough time just making it my own. Still partial to TC 2000 and the Thinkorswim chart. That's where I do most of my work. But I do know there's lots of neat features in TradingView, but I just haven't spent the time to really make it my own. MACD is definitely positive on the weekly. And look at that. The Russell 2000 getting into overbought territory on the weekly. Say it isn't so. It is. And on the monthly chart, there you go. A little tail on here. Nice follow-up candle. We need this to close nicely positive. Chandelier and PSAR stops totally positive. MACD never threatened to turn negative, which is good. And hey, we've got a overbought MACD, or RSI, I should say, on the rut. And again, just because you have an overbought reading or a red hot reading on the RSI doesn't mean you have a reversal. Bull markets tend to get overbought and stay overbought, and that's exactly what you want to see. So, all three charts bullish. What can you say? All-time highs. I mean, call me Captain Obvious, but this is a market that has not shown any signs of wanting to quit. And hey, look what we got. So we've got a market that is now under the 16 level with the VIX. We'll take a look at the options, see how they're trading. But VIX is pointing to more bullishness under the 17 level, which is good, and under all moving averages. The only concern here, did we close below the lower Bollinger Band? Let me maximize this because we tend to. So we closed at 1574. And let me see if I can figure out. Um, yeah, looks like we might have closed below that lower Bollinger Band. And what tends to happen after you get a close below the lower Bollinger Band we get a snapback. Here's one where we tried to do it. We snapped right back. Here we've come to tag it. Now it looks like we might have closed below it. What was the low here? 1561. Yeah, we might be right on it, right below it. So um, that's the only concerning part about that daily chart. If we close below the lower Bollinger Band, we tend to get a snapback within a day or two. And tomorrow's the end of the month, so who knows what shenanigans they have in store for us. And then Monday will be the beginning of the month where a lot of new money comes into the market. And you know, uh, it tends to be a bullish day. But we'll see. But VIX not indicating any signs of trouble. VBIX. Okay. Finally we get the VVIX under 90. Okay, so this one's not sounding any alarm bells, contrary to what my trading platform is. ringing. Let's take a look at the VIX options. And our next monthly expiration for VIX options is in 19 days. And we close at 1574. Let's call it 16. And what we like to do is play a little game called how much are the out of money options on the call side versus the out of the money options on the put side. So if we're at 16 and we go to 17, we want to buy a call on the VIX because we're bearish on the market. We are going to pay, get out of my way, say $1.61. But if we want to buy a put, we're going to pay 7 cents. So 161 divided by 7. Calls are priced at 23 times put. So this is one data point saying that the VIX options give you a little bit of a bearish hint that something might be coming up. Let's see what next week's options look like. Uh, Looks like somebody doesn't want to make a market here. 24, 17. Yeah, this is terrible. Let's try the week after. Nah, markets are terrible. That's why I would go out to the monthlies. Okay. So one data point in favor of the bears here, saying that there could be some pullback or volatility coming in the VIX. Take a look at the SPX expected move. Again, it was 115 points to start the week. We already know that we are about 50 points above that. And into tomorrow, we still have 39 plus or minus 39 points to go. So that should be fun. So we already used up the entire expected move, but we still have 40, give or take, into tomorrow. So what is the week after looking like, although it's very, very early? Um, so I plot my expected moves based on the 4:15 p.m. Eastern time price tomorrow. But right now it's saying next week is about 112 points. And um, hmm, despite and it's really early to tell, despite the decrease in implied volatility, we're not losing much in the way of the implied move next week. I don't know what economic reports we have coming up next week, but um, no FOMC meeting just yet, but there's probably a jobs report on Friday. Anyway, um, that's it for the market part of this show. Let's see if we have any questions. Any questions? No open questions. All right, guys. Give me a sign if you're still alive out there. Anybody? Anybody? Little thumbs up. All right, we have signs of life there. Very good, very good. Okay. Let's see here. Let's move on to our open trades. There you go. Party hat. And let's bring this up again. Okay. What are some of these stocks doing after hours? MongoDB is going to pull another snowflake up 22.5% after hours. Dell up another 17.5. Jeez. NTAP up 10%. A lot of tech stocks here are up nicely. Uh, the Gap, I guess they're falling into the gap at 12.8%. American Eagle Outfitters, geez, these these fashion and ready to wear chains getting hit. Gap and American Eagle, Elastic, Autodesk losing 3.3%. Oh, Ambarella. That one's still a stock. Okta. Okta cannot get out of its own way. So Sentinel, that one is I think that's a cybersecurity stock. Um, oh, well, that one ran up to 18. So if it's down 17, it's not a surprise running into earnings. Costco's supposed to be reporting tonight. Did they report? Or did they wait till 6 o'clock? I think they wait till 6 o'clock. What do we have? Nothing, zero, no report from Costco just yet. Um, a big holding for my managed clients in Costco, even at these prices. Oh, it helps if I type in the right symbol, right? That's Citibank. I told you guys I'm amusing myself here. All right, did earnings come out? Yeah, it did. So they beat earnings by a penny and a half. And what's the stock doing? Absolutely freaking nothing. Um, Geez, is this not trading or what? Okay, so 9.95. What are the spreads on this stock? 998.59, a dollar wide. Okay, on a liquid stock like this. Yeah. All right, so enough of that nonsense. Let's get back to it. We've got trades. Told you guys, if you don't amuse me, I'll amuse myself here. Let's switch to my trades here. All right. We have 23 open trades, it looks like, and we will start out with a daily chart. And we get rid of this, collapse that, down, boy, down. Okay. Adobe just can't seem to get out of its own way. And this one should be having earnings coming up, right? On the 11th. So we're a couple of weeks away. We took one brief um, premature profit target and it's trying. And I was surprised given that software strength today that Adobe didn't rally more. So IGV still rallying. And it's going to run into resistance here at the 200-day. That's the software ETF. Um, but Adobe is not benefiting from the snowflake effect, that's for sure. Um, in any case, we'll give this more time. This is a June spread. We're down 85% on this one. We'll have to figure out what to do if it doesn't start moving into earnings. So we are net underwater on this one. Amazon. Here's another frustrating stock. It rallies, and then it just pulls back and it rallies and come on. All right. Look at this. So we are, haha, we hit our price target right near the close, it looks like. I didn't catch that. So it says we're up 45%. So we paid 672 as I was 1.5. So um, yeah, we could take profit targets on this. If you took profit targets, good for you today. That was our first profit target, and it's about time because it's taken about 11 days. But looks like this one could start to get going and attack the old highs, especially if this market stays bullish. So yeah, I was looking at this earlier today, and I was like, "Come on, this market is strong." And stocks like Amazon and Google just dogging it. All right. Amazon looking better, and you should take a profit target tomorrow if you didn't do so today. All right. BSX is pissing me off. They had some news yesterday. I think they were presenting at a conference, and we have a 60-55 put spread, which is deep in the money, and now we're down 40% on this. This is not looking good for BSX. I may have to pull the ripcord on this one soon if it doesn't start to show some strength. Even I don't think XLV was up today, was it? Yeah, it was up $2. So this is a BSX problem. So yeah, I'm gonna look at this tomorrow and decide whether or not to just jettison it. It's just ridiculous that the stock cannot rally or at least get out of its own way. Boston Scientific, boy, this thing used to be a momentum darling at one point. So, look at that. Rallied all the way from 35 to 109, almost I guess that is a triple, and round tripping it back to 50. So there's definitely distribution going on here, and nobody's there to catch the fall. And so we may have to just bail on this one. It's not working out. CRM. Um, Here's another software stock where they love to beat up on it. There's just no bull showing up for this one. It was up. It was down after earnings, but couldn't hold the gains. I guess it was down a buck 34, but it was down a lot more overnight. I think it got down to 170 oh, that's a monthly chart. Duh. Okay, so where did we get last night? Yeah, I mean, it came really down to 166, and to close at 176 is pretty good, but it rallied strongly at the open after they sold it, got all the way up to 182.48, and then came in a bit. At one point, we were getting close to our next profit target. We didn't quite make it, um, but here we are. 13 is our next profit target. I still like CRM. Think they had good things to say. I did not read the transcript or hear the conference call yet. That's usually fun stuff for the weekend. Um, but in any case, holding up there. Hopefully, it doesn't pull a Adobe. Still under the 50-day right here. CRM. We've taken a couple profit targets, and really those are minor profit targets. Um, with a long-term play here, we need better action, but we have time. Well, if you were wondering, hell does freeze over, and look at that, a Hormel today, up 12.5% on a great earnings report. And I hope you guys are still in this, hanging in there with me. Uh, Getting stuck obviously at the 200 day. It is not going to get through there on the first try. We know that it never does. But what we don't want to see is this gap up and tomorrow we gap down and we have a little island top again. And that would be just awful. But high volume here today, 11,280,000 shares. So, but unfortunately, we are still down 123% on the structure. So we paid $1.13 for the combo, buying the 25s and selling the 23s. But we have a lot of time till January, and hopefully this is the start of something good to get us going. So we were way too early, but I'm not going to get too excited. This MACD is positive, and we are already overbought on an RSI basis. So, but all you got to do is zoom out to the weekly. And you have a nice candle here. The 50 WMA, weekly moving average, is right here. So we'll run into a little bit of trouble there. But if this is a start, we'll take it. And this is one of my larger positions. So hopefully you got in and we can finally make some money on this spam of a stock. IWM. Um, we rolled our strangle from June up to September. And what I like to do is I like to do it no later than 21 days before expiration. And today we are 3 weeks away from triple witching expiration. So we took the other one. We probably took a 36% loss on the June spread, and we started a new one. We're up about 1%. And so if you didn't see the question in the forum, someone asked why I picked these strikes, take a look at it. But essentially, um, the skew dictates a lot of my choice. First of all, we want to roll for a credit. Okay. And if you look at the IWM, and let's take a look at the September options. Sure, we could have gone further out of the money. Um, oh, where are my strikes? Okay, so we did the 310s, 250s. And I know this is near the money, but we want to roll for a credit. So 790 here. This is a 36 delta. and it has 21.71% implied volatility. We go out to the 250 put. It's a 13 delta, and this one has, where is my implied volatility? 28.46 implied volatility. So you can see right off the bat is um, we are selling a higher implied volatility put, which is farther out of the money than the call because the skew is giving us more bang for our put sale buck here. And we could have gone out farther on here, and but we would have had to come closer on the put. And after the run the IWM has, we don't want to be too close and get hit. As it is, we are at a 13 delta, and anything over a 10 delta um, has the potential of being hit. But 33 points is the expected move. 33 from 292 gets you to about 259. So we are about $10 out of the money from one standard deviation, which is a good thing. But obviously, on the call side, we are still definitely in range. It's a 36 delta. And we are definitely uh, call it so one standard deviation would be 320. So we're within one standard deviation. In any case, we wanted to collect the credit for the roll and see if we can end up making money on this trade. And we'll take it from there. JP Morgan. And by the way, if you weren't in the other trade and you want to do this, then I wouldn't, if you want to sell premium, I wouldn't initiate this trade exactly. So if you want to do it as a fresh trade, you weren't in the other one, then I would look out to the 360 calls and call it the 245 puts for $4.23 credit. But you have to be able to, you know, sit in this for a while and let time do its thing to theta decay. So if I were starting out a trade, that's what I would do right now. It would be the 423. But honestly, if I'm thinking about it with implied volatility where it is today, I would not initiate a new um, strangle sale until implied volatility pops back above 20, which is where it was when we did this these strangled trades, by the way. Okay. JP Morgan. Um, that's a weekly chart. Take me back to the daily. Um, Kind of a pop and flop here. It was yesterday was disappointing, and today little follow through. So we are back at our close to our stop. I don't want to get stopped out of here, but the banks just are not behaving well. So tech is sucking all the oxygen out of the room, but we just can't seem to get going. And the financials, let's take a look at when I look at the markets, I look at the financials as a risk on indicator. I look at the HYG, the high yield bonds. Um, these are behaving like stocks, although they're not exactly setting the world on fire, but they're not going down either. So the banks not rallying is a concern for me. And I saw um, quite a few big put buys on the KRE, the regional bank ETF, yesterday, and some put buying on JP Morgan as well, going out a few months, way out of the money stuff, but big institutional buying. So we'll see what that all means. It's very unusual with the economy humming on all cylinders for the banks not to be participating. But eventually, if they're going to keep this market rolling and tech gets a little bit overpriced, then they'll come after the other 493 of the S&P 500. But so far, um, I would not stop out on this tomorrow. If this dips below tomorrow, our stop, I would not stop out of this. This is a long-term trade. I'm going to reevaluate the stop a little bit. I'm going to take some liberties with this one because I don't want to get stopped out on it, especially since we really haven't gone anywhere. We're just running in place. And so far, uh, the my original stop on this, which was about 280, has not even been touched. KIE, here's another one where it was starting to look good and gave it all back, and now we're back to the low. So I may have to consider closing the rest of these. This is just basically dead money. We've taken a couple of profit targets on here, but um, I don't know whether it's interest rates or what it is that these insurance companies can't seem to um, do anything. And back when I put this on, my other alternative that I was considering at the time was the IYT. And this one has done so much better, and it would have been a better choice, but the options in this ETF are just crap. I mean, or at least they were when I was looking at it. Oh, 205, 360, $2, 275. I mean, this is a small stock, but the liquidity is awful in here. And that's why I went with the KIE. But in any case, that's neither here or there. But KIE might be on the chopping block because it's just not doing anything, and this market is rallying, and it's behaving like a financial, truth be told. Microsoft, um, having a nice day today and holding up very well. So our next profit target is $48 on this particular spread. We've taken three profit targets. MACD is looking to flip positive again, and RSI is at the 60 level, so nothing unusual here, but still living under the 200-day moving average. So we have a lot of room to get up there, but our long-term play looking good. And uh, we spent $19.25. I'm looking for 48 bucks on our next profit target because we've taken three profit targets on here. And I like Microsoft. And if you're not in this spread and you want something long term, you definitely can initiate something. And it hasn't run too far yet. So if you wanted to come out to March and you want to get into something in Microsoft, don't buy it on a day where it's up 14 bucks, that's for sure. But wait for some weakness in the market and say buy the 430 500 call spread. That's about 25 bucks. And then sell something like the 360 300 put spread. So that's about 14 bucks. You can play with these strikes any which way you want. If you make that 480, get it down under 10 bucks for that spread. That's an idea if you're not in this trade and you want to get into it. But again, wait for a down day. Um, don't be a FOMO bozo on that. Netflix, we closed today. This is another one. That is not behaving, excuse me, and just can't seem to get going. And ever since the earnings gap down, it's been down and down. And um, talk about a stock falling from grace after they did the split. But it's starting to remind me of the Paramounts and the Warner Brothers stocks, which just uh, languished and languished for months and months and years and did nothing. So is the bloom off the rose in Netflix? I don't think so, but certainly not giving us what we need. We took a 50% loss on these calls. I may be back here. It's holding, if it holds the 85 level, we might give it another try, but this gap has definitely been closed. We just need to see better action from Netflix. And talk about a stock that's been disappointing of late. NVIDIA finally finding a bounce after earnings. I mean, talk about um, 236 all the way down to 208. So $28 and tried to rally today. Got caught up in the 21 EMA, this green line here. We have two trades on NVIDIA. One of them is a 200 180 bull put spread. We sold for $3.11. It says 307. Okay, we'll believe this one. So we're down 25% on this, but this is trade number da, 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 da. Um, this is probably number 16 or 17 on NVIDIA bull put spreads, but I am confident this will be profitable. If you're not in it, you could still get in it. I have no problem with that. But if the stock is up $5 tomorrow, don't be putting on a bull put spread when the stock is up $5. The other trade is a long-term trade. We've taken about four profit targets and we held this into earnings and we are waiting for our next profit target. We bought this for 11.74. This is a combo. Uh, and we're just waiting patiently for the next profit target, which is 45, which is like a 4x. But this is a long-term trade. We're in no rush to get out of it. And NVIDIA has not done anything wrong except have too high of expectations. And so the lords of the market want to punish these late longs as they always do. So NVIDIA. Well, what do you know? So Palantir lives, and what have I been saying for weeks now? I mean, this could be another pop and flop like here, but you just never know when this pop is going to come. But I think this is on the news of Snowflake uh, making good money, and so Palantir popping in sympathy, which is finally a good thing. And I believe that it is still viable here. Um, Again, wait for maybe a $2 or $3 pullback, and you can put some in for the long term. In any case, our bull put spread is up about 30%, but I am not going to cash out until we get to a buck on this one because this was a two-time roll and we want to get our money back on it. But very encouraging action in Palantir today. I like it. Hopefully, we get follow through on this. If they, um, if you look at snow, what was it up 40% today? Well, it ended up 36%. So, geez, look at that. If you were short this, you were hurting today and on a huge volume, almost 40 million shares. Yeah, this one might be a candidate for us to sell a put spread. I'm gonna take a note. I'm gonna watch the action tomorrow. I'll write down put spread. I wouldn't be chasing this, but typically, if it can hold the low of the gap up day, 230 at 229, then we can write put spreads all day long. Let's see what the options look like. Not bad. So one standard deviation out is $30 out. That's at 210. You could sell a put at the 210 level and the June expiration. If you're more adventuresome, you could go more short dated. Let's see what liquidity looks like. Not bad. You'd have to go to the 220s to get something decent. I like to collect at least 1% if I can on the sale of a put, 1% of the underlying. These 220s fit the bill, but I like to give myself more time to be right. So we could do the 210 puts here. And if you want to do a spread, looking at, so 210 is one standard deviation out of the money. By the 190s, $2.41. Good open interest on those strikes. Not bad. Yeah. I'll look at this for tomorrow, put out a trade. Maybe it pulls back in the morning. And we know where we're wrong. If it starts coming in, I don't, under 230, then I'll start being concerned. But our short strike will be, you know, $20 below that. So you could even, if you really want to be aggressive, you use that 230 strike as your starting point. That is a 35 delta. 230, 220 put spread costs you $3.67. You're collecting more than one third of the width of the spread, which is fair. I mean, but it is right there at the bottom of the gap up. And uh, that's if you want to be more aggressive. If you want to be more assured of not being assigned the 210, 190, or 210, 180, or just the 210s naked if you have the option, if you have the margin. Anyway, we weren't talking about snow. I digress. We were talking about Palantir and back to our regularly scheduled program. Anyway, that's what I think propelled the move in Palantir today. So we have the bull put spread looking better. And now our long-term uh, Palantir combo back here, but we pay 1069 and it's a double, but we've already taken profit at this level. Yeah, we might be at our next profit target tomorrow at 2175. I think that one is a pure double. We might have taken this one ahead of earnings just to be on the safe side. In any case, Palantir looking better. We want more follow through. Please and thank you. Okay, so QQQ, another one of our strangle rolls today. Again, we went out to the 680, 640 because we wanted to roll this for a small credit. And so this takes us to September. 680. We are still in the money, but we didn't have much of a choice here. We would have to go out another few months to go out of the money. But instead of a 95 delta, we were at 650. Let's take a look at it. We were at 650. We turned it into a straddle. That's a 96 delta. Okay. And our put was already down to a 4 delta. So now we have something that's still in the money. It's still not, it's still negative delta overall for us, but we did the 680s, 75 delta, and we did the 640s. Okay. So if we analyze this, hello, please analyze this. Okay. Um, It's a 59 delta, and we didn't want to go again. Skew was in our favor. We didn't want to go much closer than 640, given how far the Nasdaq has run, the Qs have run, and the likelihood between now and September that we would have a correction, and we don't want to go anything closer than one standard deviation, which I think this was, yeah, 87 point. So, uh, yes, we still are a negative delta, but at least we get a little bit of relief from a 92 delta. So, kind of reduces risk by a third. In any case, some of these I've been in for months and months and months, and they finally work out, but you just this is a one-way run. There's nothing you can do. This happens for the time. You just have to stay small and try to um, hang in there with a small size and hedge it with, ratio back spreads or what have you. So, in any case, this one is our um, inflection point spread. So this is our bearish play, and it is June 12th, 7:05, 6:55 call spread. So let's take a look at that. June 12th, 7:05, 6:65 put spread. So um, we've taken one profit target out, and so this is still on a as floor is worth $2.17. But we are also short a September 30th 600 put. So we're going to give this about another week or so to see if this hedge is going to help us. The 705 call spread is yeah, is that a 16 delta? Yeah, it's a 17 delta. 16 delta. So it's far out of the money. It's about one standard deviation out of the money at least. So it's not providing that much protection. Not that we need it given the how far away it is and the market keeps rallying. But in any case, we'll do something with this if necessary and take advantage of any weakness to either roll this or get out of it for what looks like right now is a $4 loss. Could that be? So we buy this. Yeah, so it's $4.50. Sold it for P&L is not $4.23. Something's not right here. We're probably down a couple of bucks on this. I'll have to see what's wrong. But if we um, oh, we bought it for 16-cent credits now for, yeah, I guess that is correct. So we're down $4 on this. So plenty of time, especially for these September calls or puts to, is that September 30th? Yeah. Again, when you put on structures like this and the market just keeps going the other way, then there's not a whole lot you can do about it. Yeah, those 600 calls are still worth $6 if we wanted to buy them back, but this is kind of a bullish exposure type of thing if you have this one on. SPY, uh, we have two trades, and one of them is our bearish hedge that we put on last Friday. It's not working out for us, so we have a 50% stop on this at 415. So if we hit that, we're out. Um, it looked like it was going to be a nice trade for us on Friday night, but not so much on Monday morning. But that's what happens when you have a hedge put on, and the market keeps going up and up and up. The other one we have is our strangle. This one expires on June 30th. We have not rolled this one just yet. We're down about 91% on it, and we will look at rolling this probably next week when we get within 21 days. So by June 9th, we'll roll this out to probably September 30th by the time we get to this one. So neither one of these trades is working out. Both of them are because this is negative delta. This is negative delta counter trend to the market. So in any case, if you didn't need a hedge, you didn't put it on. TLT, we have two trades, and this one's going in our favor. So we bottomed at 82.77. We're at 85, and we are knocking on the door of the 50-day, this blue line up here, about 85.90. So we have a short put, and that's right here. And we're down at 28 cents. So we're only a few pennies from our profit target. When we get to this profit target, You want to take off 1/3 to 1/2 of these. This is like number what? Number 16 in a row put sales. We also put together a back ratio with TLT. We've taken one profit target on it. And would you look at that? So we should have taken another profit target on it. It's at $2.02. Do I have that trade here? Yes. Um, oh, that's a buy. So it says 79 cents. It says last $2.02. I don't buy that. It's only 80 cents. So not much more, but if the TLT continues to rally, we will be able to take our next profit target, which I have designated at a buck 50. And given that this is a back ratio and we are above the 85 level, if we continue upward, then this is just pure profit because we're short one, long two. So this should be if this continues upward, then this should be a nice trade for us. And if you wanted to take more off here, you could. You don't have to wait for my price target, but TLT, both trades looking good as opposed to the SPY, which are not. All right. Uh, Tesla came very close today to hitting our next profit target, and that's at 24.50. And we've already taken two profit targets, looking really good. MACD flipped positive, bullish PSR, bullish chandelier. Nothing to complain about here. Tesla is looking good for us right now. So hope you're in this one. And if you get 24.50 for the spread or even close to that, take it. TTD. Um, this is just another frustrating stock where it just refuses to go anywhere. I mean, uh, software has been positive, but TTD just can't seem to get any lift. We're still up 35% on this, but I keep looking to see if we're going to go long something, but it sure doesn't look like it. But in any case, it hasn't done anything wrong since earnings, but certainly the CEO buying, was it $148 million worth of shares has not helped the stock. Um, in any case, how much was it? We rolled this out. So in any case, we are waiting to take our 50% profit target. We're not close yet, but we'll just hang on. Hopefully, this thing just gets a little bit of lift, but there's a lot of overhead resistance on this, but there's just no demand for this stock. URA is a new trade that we put on and um, hasn't done anything yet. We put it on a couple of days ago. Um, no, it says 528. It should say 526. Had a nice day today, but we're down 7.69%, not much at all. So this one, um, holding the 200 day and hopefully gets going. So the uranium trade is looking like it's back in action. If we look at its biggest component, CCJ, that one had a nice day. That one's up 3%, but this one has a lot more beta, a bit more risk as a single stock. So not too bad. Walmart, where did it go? Hello, Walmart. Um, that's our latest trade. We put this on a combo long term, a year from now, over a year from now, and I think this one is going to be a nice one for us, but it is going to require some patience. So we rallied to 135 and we came all the way down to, I guess, 170. So that's 18 bucks. And we've got a combo. We bought a call spread and sold a put spread for about 10 bucks. And we'll see if when and if this one pays us. We got a 50% profit target. I like Walmart for the long term. If you want this in your long term portfolio, you might want to buy the shares so you can collect a dividend or what have you. But I like Walmart even at this price, and if you can get some closer to the 200 day, we will likely add if we see a bounce here. So Walmart um, hasn't done anything, but we just put this on yesterday. So that's all of our trades, and let's count them up, which are negative. One, two, three, four, five, six, seven, eight, nine, 10. All right, so 13 out of 23 are in the green for us, and that doesn't count the ones that we've taken off, although we have not taken much off the board. We took Netflix off at a loss. But 13 out of 23, I'll take it. And as long as your winners are bigger than your losers, the win-loss ratio is not important. What's more important is um, the ratio of the size of your wins being bigger than the size of your losses. So let's see if you guys have any questions. No questions. I'm going to make it last call for questions, guys, if you have it, because that's all I have for you tonight. And I hope you found value in the webinar or the training session. If there's anything you have questions about, quickly type them in. Otherwise, I will be back in the room tomorrow with you. And anytime you have suggestions for trade ideas, put them in the forum. Let me know about them and I'll check them out. And otherwise, I will see you guys tomorrow in the forum and back on the weekend video. I appreciate you spending a little bit of your evening with me. And going once, going twice. No questions. All right, guys. Have a good night. Thank you guys very much. I will see you tomorrow. Bye bye.